All right, let's talk about gold. Today, we're going to break down this really powerful, step-by-step trading strategy that's built just for it. So if you've been looking for a solid plan, a real system to tackle the gold market, you've definitely come to the right place. Let's dive right into the 6 steps that make this whole thing tick.
So what we've got here is a full 6-step game plan. It's all about spotting those high-probability trades on XAU/USD, gold against the dollar. And here's the kicker. We're doing this on the 5-minute chart. Why? Because that's where you can catch those super fast, explosive moves that gold is just, famous for.
Okay, so the whole strategy, the entire thing, hinges on spotting a very specific structure. The first part of this, the first 4 steps, is all about finding this particular geometric shape on the chart. It's called a harmonic pattern, and you can think of it as the foundation for everything that comes next. Get this part right, and you're golden.
So the big question is, right, how do you actually find the right setup? How do you look at a chart and know, aha, there it is? Well, these next 4 steps are exactly how. They give you a precise checklist so there's no guesswork involved.
All right, let's get into the nitty-gritty. Step 1. You got to be on the XAU/USD 5-minute chart. Simple enough. Step 2. You're looking for a big, sharp, impulsive move. Up or down, doesn't matter. We'll call that line XA. Then, for step 3, you just wait. You wait for the price to pull back, somewhere between 50 and 78.6% of that first big move. That creates our line AB. And finally, step 4, you watch for the price to head back towards point A again. This last little piece is line BC. And boom, that completes the pattern we're hunting for. Now, pay close attention to this because this is probably the single most important rule of the entire setup. That retracement we just talked about, the AB leg, if it goes even a tiny bit past that 78.6% level, the whole thing is off. It's invalid. You just have to walk away and look for the next opportunity. This one rule is what keeps the odds stacked in our favor. It's non-negotiable. Okay, so you found the pattern, it's valid, everything looks good. Now what? When do you actually pull the trigger? That's what this next part is all about. Finding the critical entry signal, that one little sign from the market that screams, okay, it's go time. The signal we're looking for is something called a reversal candlestick. Think of it like a brake light. It's a specific price action pattern that tells us, whoa, momentum is shifting here. It's basically the market waving a little flag and saying, hey, that pullback is probably done, and we're about to get back to the main event. Now, we're not just talking about some vague feeling here. You need to look for specific, concrete patterns. We're talking about a clear pin bar, a big engulfing candle, or a doji. And you need to see one of these form right at the end of that BC move. These are the classics for a reason. They are powerful reversal signals. So here it is, step 5. This is crucial. The moment that reversal candle closes, the second it's complete, that is your entry. You enter the trade right then and there. No second guessing, no waiting for more confirmation. That's the signal and you act on it. Look, finding a great entry is awesome, but it's only half the story. This final step, you could argue it's the most important one of all. It's about managing your risk and your reward. This is the stuff that separates the pros from the gamblers. This is what turns a good setup into a consistently profitable strategy. And this is the secret sauce. This is what makes the strategy so powerful. We are always looking for trades where our potential reward is at least 3 times bigger than our risk. You see it right here. We're risking one little chunk to potentially win 3, 4, or even more chunks back. It's an unfair fight in our favor, and that's exactly what you want for long-term success.
So here are the exact numbers. Your stop loss, you place it just 10 pips away from your entry candle. Super tight. That keeps your risk really small and controlled. Then, for your profits, you set multiple targets. You take some profit at a 1-to-3 risk to reward ratio. You aim for more at 1-to-4. And if you're lucky, you can even let a piece run for a 1-to-5 target. This way, you lock in gains, but also give yourself a chance to catch those massive home run moves.
All right, we've gone through a lot, right? From finding the perfect setup all the way to cashing out. So let's do a quick final recap to lock all 6 of these steps into place.
Okay, here's the entire playbook in a nutshell. Number 1, you're on the 5-minute gold chart. 2, find that big impulsive move, XA. 3, wait for the 50 to 78.6% retracement, AB. 4, watch for the pullback, BC. 5, enter as soon as you see that reversal candle at point C. And number 6, set your stop loss and aim for a reward that's at least 3 times your risk. That's it. That is the whole system, front to back. So there you have it. You have the complete technical roadmap. You know the exact rules for getting in and the rules for getting out. The only question left, well, it's about you. See, a strategy is just a tool, like a map. Real success, the kind that lasts, comes from having the discipline to actually follow that map every single time, without cutting corners. So, the question is, do you have that discipline?